Hi, Joseph from Intellect Finance. Today I'm going to meet up with Joseph Uznik from Uznik and Associates, and we're going to be talking about self-managed super funds and investment properties. Joe!
Good morning, Joe. How are you? Come on in, mate. Good to see you. How
Good to see you,
been?
Joe. Yeah, pretty good. How you been?
Pretty good, mate. You know what it is. Like an accountant, mate. Always busy. Come on through this way, mate.
Thanks, Joe.
Oh, yeah. Come on through, mate. Grab a seat, mate.
Thanks, Joe.
No worries. Hey, Joey. Now, you're here to see me about self-managed super funds, aren't you? In relation to one of your clients.
Yeah, so I've got a client that wants to set up a self-managed super fund and use the self-managed super fund to purchase a property. And I've got to organise the finance using the self-managed super fund.
And I can take care of the superannuation fund setup, the self-managed superannuation fund setup. I've got to ask a bunch of questions though, because this has to be worth the client's while. They need to have at least $250,000 sitting in their self-managed super fund in a retail fund.
Yep.
Okay.
So they've got 300,000.
Perfect. So they're a great candidate. They also have to have a certain amount of contributions they have to make that the super fund's making to show that they can afford the repayments into the future. Do you know what I mean? So they have to be making regular contributions showing a history of those contributions. So we as a firm would not set up a self-managed super fund unless they can get the finance and generally they have some sort of property in mind and some sort of budget in mind as to what they're looking for.
We have had a look at their contributions.
You had a look at the excellent, perfect.
And we've looked at, they're looking at a property, and I mean the rental income and plus their contributions looks like it will cover the loan.
Brilliant. Okay, if that's the case, we can go ahead and set up a self-managed super fund for these guys. It's a very easy process, very simple process. We can do it in 24 hours or less than 24 hours.
Oh, beautiful.
Yeah, yeah. So we can get done quickly, certainly within 24 hours. What I'd need to do is obviously see the client, run through the regulatory issues to make sure that they're on board with how this super fund's going to run. Okay? So they're not getting themselves into deep water. Do you know what I mean? But it's really very straightforward. We take care of everything. All the compliance, the auditing, we take care of, okay? And we also run the client through, as I said, the regulatory stuff to make sure that they're not running foul of the law, okay?
So Joe, what are the advantages of actually using your super fund to purchase a property or purchasing outside the super? What are the pros and cons of either inside super or outside super?
Yeah. All right, so we'll start with cons because accountants are very conservative people, so we start with the bad stuff, then we'll go into the good stuff. Now, the cons are that it does take a little bit of time to manage the process. Once it's set up, okay, you're buying an investment property, right? And with all investment properties comes the usual management stuff, which, there's hundreds of thousands of people with investment properties out there. You're still going to need to manage that investment property. So there is additional work over and above the money sitting out in a retail fund, i.e. CBUS, Australian Super, etc. You do nothing there. Everyone does that for you. You have to get more hands-on with a self-managed super fund. And you know what? And that then helps you be a master of your own destiny.
If you look at the way that the property prices have gone up.
That's right. Yeah.
I mean, and using your super to buy a property.
Yes.
I mean, there's a lot more capital gain.
Historically, and I'm not a financial planner, but historically, property and super and retail super have run approximately at the same rate of return, roughly. But a lot of Australians, we love property. So therefore, if you can buy a property in a self-managed super fund, you may have properties outside that portfolio. You can buy something within the super fund. And one of the advantages is if you already have property outside super, land tax. This is a sore point, particularly in New South Wales, where values are so high and the land tax threshold is so low. You pick up a brand new threshold of almost a bit over $1 million when you set up a self-managed super fund. At the rate of about 1.6%, which is what the Office of State Revenue is charging for land tax, you can save yourself $16,000 per annum just by setting up the property in a self-managed super fund. So you use your existing money from a retail fund, you roll it into your super fund. You have to have at least a 20% deposit, but that's your department. You're the finance man.
Okay, so I've got a husband and wife.
Yes.
They can actually put both their super funds together?
Very good question. Yes, absolutely. And the self-managed super fund, so they can roll both husband and wife all their money into a self-managed super fund, and the balances stay separate within the super fund. Okay, but their funds are combined. Okay, so that gives them more buying power. Okay. So they can buy a more valuable property, let's say, which is likely to increase more in capital gain and also derive a bigger rent.
How easy is it to roll over the funds?
Okay, what we'll do from our end, we set the superannuation fund up, and it has to be something called a complying fund. Okay, so when we set it up, it is a complying fund. Okay. So when the husband and wife go across to the retail funds, CBUS for instance, or Australian Super, or whoever it happens to be, they will go to that fund and fill out a rollover form. The super fund, the retail fund, will check that it's a complying fund, and that's all in the public register. You can see it on ABN Lookup or ABN Super Lookup. They can see that it's a complying fund, and once the paperwork's lodged, it's a very simple process of them physically transferring the money into the bank account of the self-managed super fund. So a relatively straightforward process. The way we would generally set up the super funds would be a corporate trustee, so it's a company. So we would set up a proprietary limited company, and we would also set up something called a super fund deed. Okay, so it's a two-part process. Okay, so when you set up the corporate trustee, there has been changes in the last 12 months where you have to get a director's ID. Okay.
So just timing-wise, from start to finish, to set up the self-managed super fund, it takes roughly.
As I said, to set up the self-managed within 24 hours, we can set it up.
And then
the rollover takes a little bit longer.
Okay.
Yes.
Right.
The rollover takes. Listen, I'd allow a week and a half, a couple of weeks for the rollover to be done from the point where the form's filled out and sent, and the retail funds receive the form. I'd allow a couple of weeks for them to process it, do their checks, and transfer the money.
All right, I'll get the client to come and see you.
Yep.
But just can you give us a brief summary about what you can use your super to buy?
Sure, absolutely. Listen, there's really no restrictions in what a superannuation fund can buy in terms of third-party purchases. Okay, you can't buy a residential property or from yourself. Okay, so if you've got an existing residential property, you cannot buy that in the name of your super fund. But if you go and buy a property from the local real estate agent or a third party, no issue, no restrictions. It can be any type of property. It can be a residential property, a flat. It can be. I've got clients who've got car parking spots. They've got car parking spots in the city, and they bought in their self-managed super funds. It can be factories, it can be offices, it can be anything. No restrictions. But what's really important at this point, Joe, is that the clients can buy property in a super fund, and if they've got $250,000, $300,000, as in the case of your client,
they do need to borrow.
Yeah, they need to borrow. And what's really important,
what are they going to do different?
Yeah, there is something different. So what's really important for them to borrow, we set up the self-managed super fund. Okay, then we have to set up at the point where they borrow something called a bear trust. Okay, so it's a regulatory setup that needs to be done in order to borrow, because super funds traditionally cannot borrow money, just not be able to borrow money. It's always, they've got to always use their own funds. And about 15 years ago, the government sort of says, well, listen, if you set up a bear trust, you can then borrow money, okay? And so therefore, that $300,000 they can leverage into $1 million property, because they can borrow $700,000. Okay. Again, what we talked about earlier, servicing.
They've got the borrowing.
They've got the borrowing capacity.
Yep.
So we then need to set up a bear trust. Again, a very simple setup. It's something that I'll already have the information when I set up the super fund to set up the bear trust. Very easy to do, and no extra management required by the clients. Very simple. Once it's set up, it just sits in the background. Okay.
Just like a normal property, they'll just rent it out.
Yeah, just rent it out.
Rent goes into that account.
That's right.
Okay.
What the only big difference, and like all properties, you have to do a tax return once a year. If you've got investment property in your own personal name, you've got to declare all the income and expenses in your personal tax returns. What has to happen with super fund is a little bit different. You've got to do a set of accounts, and the fund has to be audited once a year. Okay. Once a year, it's got to be audited. It's not a big cost; it's a relatively small cost.
That's just to make sure that what's happening with their super, which is fair enough.
Well, what it is, Joe, it's to make sure, as I said up front, that it's very regulated, okay? Yes. and the auditor and the accountant make sure you meet the regulations. And that's something I'll discuss with your client when they come in, when you send them in to see me.
Okay. So what happens when the client retires, the loan's paid off?
Yeah, very good. That's really important. This is the whole beauty about the self-managed super fund. The rent that the super fund will receive is then tax-free. Okay, so if you've got an investment property outside the super fund, you'll pay tax to the end of your life. Once you reach a minimum age of 60 and you've retired, okay, so there's a condition, you've got to retire at 60. The super fund then does not pay any tax on the rent received. Even if it's $100,000 a year, you'll pay zero tax.
Wow.
Yeah.
Okay.
So it's a very powerful structure. All right, Joe, is there any other questions that you've got? Anything that I can answer for you?
You've answered all my questions. Okay. I'm sure my client's going to have a lot of questions for you.
Yeah, sure.
But thanks very much for your time.
No, my pleasure, mate. It's been an absolute pleasure. And thank you very much for the opportunity.
Wow, that was very interesting. Now, my client has already seen a financial planner who's asked him to go and see an accountant to go through the regulatory and tax implications of setting up a fund. And now he's ready to go. Thanks for coming along with me. I'll see you on the next video. See ya. I think you pretty much answered all my questions.
Good, excellent.
Thank you very much for your time. I
no
know. I was going to keep saying busy man.
Time is valuable.
I know your time is time is valuable. Hard to say that.